So this obviously, again, has been done in PowerPoint. The better way to do these transactions is on an Excel spreadsheet. So you can imagine what we're going to do now is add all these columns down. And you see that line there called EB, which is ending balance. So when we add all these columns down, what are we going to have? We're going to have our balance sheet as of the end of year one. So let's add all the columns down. Okay. And then if you're like me, you want to check that these columns actually add up to each other so that total assets in the assets column is 46, liabilities is 20, stockholders' equity is 26. Often when you're doing this, you can make small mistakes, and this is sort of the double entry feature of the accounting system, is that when you form your balance sheet, you will discover whether or not you have any small mistakes in there, and then you can look up above and correct them. So just sort of arranging this information now. So EB, again, is our ending balance sheet. And then arranging this information, this is the way that US companies present their balance sheet, which is cash, which is the most liquid asset, goes at the top left. Then you've got accounts receivable, less liquid assets. In terms of liabilities, accounts payable, which is your most liquid liabilities, goes up at the top. You compute total liabilities, compute stockholders' equity. Now, other countries, and this is just a convention, they sometimes will put the least liquid asset up on top. So in this example, another country might put inventory on top and then sort of cascade it down to cash. But clearly, the presentation is just a point of emphasis, but it doesn't change any of the substance. Having done Peter's company and having created the balance sheet, now we're going to create the income statement and the cash flow statement.